think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today, I have a short video. I know my videos have been kind of long, 14 minutes, 20 minutes, an hour, things like that. But today it's just going to be a short video that I want to bring to you all because I want to talk about what is a bear market rally. So I've talked about this a few times on my posts and on my videos, but what exactly does this mean? And I want to bring that education to you all so you all know what to expect going forward, right? So let's get into it. So in my last video, I talked about the Fed tightening. I talked about how the Fed is going to sell bonds off of their balance sheets, that is bonds and mortgage-backed securities. And so the Fed has not been talking about changing course. They're actually talking about keeping up with the same course that they're on. And there's even articles coming out talking about the Fed is going to raise interest rates by 50 basis points twice in June and July. We don't know how far they would get before the markets really see just so much turmoil that they have to ease on their tightening and on their hawkishness. So we're going to talk about this. How does this play into the markets and what should we expect going forward? So a bear market rally, this is Investopedia. This is an investor's best friend. I would say that. So Investopedia, we're going to look at that. So what is a bear market rally? Bear market rally refers to a sharp short-term rebound in share prices amid a longer-term bear market decline. Bear market rallies are treacherous for investors who mistakenly come to believe they mark the end of an extended downturn. As the primary bearish trend reasserts itself, the disappointment of those who bought during a bear market rally helps to drive prices to new lows. Bear market rallies are also known as a dead cat bounce or a sucker rally. Bear market rallies are significant counter-trend recoveries in stock prices that can last as little as a few days or as long as months before the market reverses to new lows. The deepest bear market rallies have tended to produce the largest, longest bear market rallies. There is no sure way to identify a bear market rally as such until it unwinds. Investors focused on market fundamentals and familiar with the history of bear market rallies stand the best chance of avoiding these traps. Okay, so then it goes on to say that a bear market is commonly defined as a stock market decline of 20% or more. So the S&P recently almost hit bear market territory. It didn't close in bear market territory. It actually rallied off that low, but it was close to being 20% from its highs. I know the NASDAQ and the Russell 2000 have been in bear market territory as they both have hit 20% off of their highs. So it says, at some point during the downturn, an orderly retreat typically turns into high volume panic selling. Bargain hunters grow convinced capitulation is at hand and signifying at least a short-term market bottom. So key word in here is short-term market bottom. So this is short-term. So a lot of times people come out and say, oh, the market has bottom. It's time to buy in, blah, blah, blah. And people think that they get in at the bottom, and then the stocks actually keep declining, and they keep declining over the longer term. So let's go ahead and look at a chart. This is a chart. This is a cool article that came out in 2020. But this chart talks about a bear market rally. So as you can see, the NASDAQ shot up a lot. This was during the dot-com bubble. So it shot up a lot, and then it was just way overvalued. And you're looking at this, and it's about 79% between the top and the bottom. And so then the NASDAQ sells off sharply, and then it bounces, right? It bounces 42%. So some people may have bought in here like, oh, it's going to go back up, and saw it bounce and didn't sell before it really starts to go downward. And so these bear market rallies are important to understand so that you can be able to take profits, so that you don't get stuck holding the bag, right? So it rose 42%, then it declines even further, then it rises 28%, then it declines again, rises 41%, declines again 51%, then it continues on to decline, and it went from $5,000 to $1,400. So understanding this is very important because you want to be able to take profits, especially right now. We have the Fed. They are not reversing course. They're actually saying that they're going to tighten. They're going to sell mortgage-backed securities. They're going to sell bonds. They're going to raise interest rates even more. So I expect to see more downturn in the market. As you can see, for articles that are coming out, it says Dow raises for a 5th straight day, S&P 500 and NASDAQ on pace to snap a 7-week losing streak. So these indices have been losing 7 straight weeks, and they're on track to snap it, right? So the question is, okay, is this a bottom? Did they reach a bottom, or are we actually in a bear market rally? I believe we're in a bear market rally because they were declining for 7 weeks, and then now they're starting to actually bounce back. So nothing falls straight down. I've told you all that. I mean, we look back at the chart, the NASDAQ did not fall straight down here, 79%. It bounced. Yeah, it bounces along the way, different bounces along the way. So you can make money in these bear markets when you buy low, sell the bounce, buy low, sell the bounce, buy low, sell the bounce. So you can actually make money. So I hope this was helpful for you all. Be sure to hit the like button, to subscribe, drop a comment down below. Let me know, what stocks are you buying? What are you expecting in this bear market rally? Or are you believing that the bottom is actually in, and why? Just engage with me in the comments. I appreciate you all for tuning in to the Money Level Show. You all take care. Peace.